Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates Asset Management. Well, in the last week, the Chinese real estate developer EVERGRANDE burst into the investment consciousness as a real potential threat to peace order and rising stock markets. So the first thing that everyone has done is to look at their own portfolios to see what damage has been done and going forward what is likely to transpire. I have to admit that the FANGs in my Phantom portfolio did not manage to avoid any damage, but at least so far it looks as if the damage has been more or less contained and no one should be leaping out of tall buildings or tossing their FANG stocks out the window yet. But before we do, take a close look at the post-EVERGRANDE FANGs. As always, I do like to say thanks to everyone who likes these videos and all our subscribers. Okay, let's go back and start with Amazon. And, as I've said now for a number of weeks, Amazon has come virtually right down to its HB2, which is 12 times its book value, and that happens to be a 10-year low for the company. And as long as the stock valuation is able to stay above that level, then we are definitely keeping it in our FANG portfolio. The number, by the way, which would cause a breakdown would be a price to break down below $3,090. Right now, we're sitting at $3,400, comfortably and safely above that level. Microsoft just continues to sort of hum along happily. In the last 3 weeks, it's kind of slid off a little bit, but fundamentally it basically stays solidly in the FANG portfolio. I do want to say, however, one thing about this kind of stock. When you find a stock that's between two breakpoints, there is almost nothing that I can say or anyone can say about the short-term direction that the stock is going to be heading in. In point of fact, between breakpoints, the stock market is a random walk, and therefore trying to parse the outlook for Microsoft in the very, very short term, I wouldn't call it a fool's errand, but I would say you're probably wasting your time. We are going to keep that stock in the portfolio because as long as the markets are heading higher, I think that Microsoft will head higher with it. Netflix, well, Netflix just went into the FANG portfolio fairly recently on a breakout, and look what's happened. We've had that nice breakout and pullback to the HB3 price, which is 16 times book value. In other words, a typical technical analyst breakout, pullback, preparatory, hopefully, to moving higher. It very much appears, by the way, that the market is actually quite happy with the move that Netflix has made into the gaming industry. And as I say, it appears as if the stock wants to go and wants to go higher. Okay, next we come to Alphabet, and I put that into the FANG portfolio because of that recent breakout, and now we see with the EVERGRANDE setback that it looks as if the stock, in point of fact, has set back and maybe giving us a sell signal. Well, wait a minute here. I came across some very important research just this week that gave me an idea of the share buybacks that have been going on. And guess who are the two top shares of all the companies buying back stock? The first is Apple and the second is Alphabet. Now, I took the numbers that they provided, and it looks to me very much, when I recalculated the balance sheet, which I had to do by hand. I can't do this in our service as of yet. It looks very much as if the actual bubble price for the stock, 7.4 times book value, actually is down about where that dotted line that you see. So it looks as if rather than the balance sheet going up, it is actually flattened out. So, in other words, the stock remains very much in my FANG portfolio. And the second stock that I told you about that looks, well, it has been the top share company buying back stock has been Apple. And when I did the same exercise with Apple, that is to recalculate the balance sheet and therefore where the breakpoints were, it looks to me, if my calculations are not wrong, it looks to me very much as if the new breakpoint value, which would be, by the way, the HB6, because what's going to happen is that line is going to be pulled down. It looks very much to me as if the new HB6 is where the current HB5 is. And remember, we had that happen with us once before with Apple, okay, just fairly recently back here when we thought we'd got a breakdown, but it turned out, whoop, with all those share buybacks, hadn't happened at all. Looks as if it's happening again. And therefore, Apple is sitting right on its HB6 price. Facebook, well, I say about Facebook, I'm sorry. I regret actually not having sold Facebook when it was up at its bubble price. It looked very much like to me, if momentum carried on, that the stock would be able to, first of all, get back right to its bubble price, and secondly, even break out. So I didn't want to do anything. Well, actually, Facebook was the third largest share buyback of record in the latest quarter, but certainly it's not going to be enough to pull the breakpoint lines down to a level where the stock will be seen as expensive. We're going to have to kind of sweat this one out in the shorter term. Finally, Nvidia. Well, Nvidia, kind of like when I showed you the chart of Microsoft, Nvidia has been just threading the lines between the HB5 and the HB4. And it hasn't therefore given us any signals one way or another, despite bouncing back and forth, because we haven't got either down to a buy point or up to a sell point. And therefore, I am going to continue to leave it out of the FANG portfolio for better or for worse. Now, in summary, we did not avoid all damage to the FANGs in our Phantom portfolio, but with one possible exception, the worst might be behind us. Facebook is the one stock that I perhaps should have sold when it got back to its triple top high at its bubble price. That's 7.4 times book. And I regret that I didn't. For the rest, we're bloodied, perhaps, but we're not bowed. The Standard & Poor's 500 has bounced up off its 100-day moving average, and that may, and I emphasize may, be the end of it for now. If there is worse to come for stock markets in general, thanks to the EVERGRANDE situation, that might trigger sales among the FANGs in the Phantom portfolio. But that is a story for another day, although that day might come as early as next week. I personally doubt it. But realism, not optimism, has to be the order of the day right now. For now, this has been Ross Healy, the chairman of Strategic Analysis Corporation and a senior portfolio manager at McNichol & Associates, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next week.